Unit 5, the trial balance and the final account of a sole proprietorship. Section 5, Statement of Financial Position. 1. By the end of this session, you should be able to define a statement of financial position, distinguish between a statement of financial position and a trading profit or loss account, state and explain the accounting equation for the statement of financial position preparation, and draw up a statement of financial position using the horizontal and vertical styles of presentation. The statement of financial position is prepared from the assets, liabilities, and capital of the business. That is the closing balances of assets, liabilities, and capital of the business. The statement of financial position then is a financial statement which contains the assets and liabilities and capital of a business to portray its financial position on a particular date. It is thus a position statement. Statement of financial position and trading profit or loss account compared. First, the statement of financial position is not part of the double entry system of a business. Thus, entries in the statement of financial position are not made on the double entry basis. This is not the case of trading profit or loss account. It is an inherent part of the double entry system of a business. Second, the statement of financial position is a position statement. It is drawn to show the financial position of a business at a particular date. However, the trading profit or loss account is a flow statement. It is prepared to determine the profit or loss for a period of time, which is usually a calendar year. Third, while the statement of financial position has the objective of showing the financial position of the business, the objective of the trading profit or loss account is to determine the net income, that is the net profit of the business for a financial year. Fourth, it is clear by now that the statement of financial position lists assets, liabilities, and capital, which are real and personal accounts, to achieve its objectives, while the trading profit or loss account matches income and gains against expenses and losses, all of which are nominal accounts, to determine the net profit for the period. Remember that the accounting equation, as we determined previously, is the total asset should equal to the sum of the capital and the liabilities. Or we can also restate it as the total non-current assets plus the total current assets, which is the total assets should equal to the capital plus the non-current liabilities and the total current liabilities. We have two main formats of presenting the statement of financial position. We can either use the vertical format or the horizontal format. Traditionally, what is used in the presentation of the statement of financial position is the statement form or the vertical format. And the vertical format may look like this. So we have the non-current assets, where we have listed the non-current assets, the cost, the accumulated depreciation, and the net book value. And the total of it is given as the total non-current assets. Then we have the current assets, which may include the inventory, trade receivables, prepaid expenses, accrued income, bills receivable, treasury bills, cash at bank, and cash in hand. So the total of the current assets is added to the total of the current liabilities. Then we have the total assets. Then we can have the current liabilities, which may include trade payables, accrued expenses, prepaid income, bills payable, bank overdraft, short-term loans, among others. And in the long-term liability, we can also have long-term loan. So the total of the current liability and non-current liabilities will be the total liabilities. Then we can have the capital that is employed. So the capital, in the case of a sole proprietorship, the capital at the beginning, we add draw net profit and we deduct drawings to arrive at the capital at the end. So it's estimated that the total of the liabilities, that is the current liabilities and the non-current liabilities, and the capital, that is the capital at the end, should equate to the total of the assets, that is the current assets and then the non-current assets. This is one way of presenting it. The other way is the net worth method, where we can deduct the current liabilities from the current asset to arrive at the working capital, to which we also deduct the long-term liabilities to arrive at the capital employed. Then this is equated to the capital at the end of the period. Or we can also have the horizontal format. So it is actually shown in a table form, or in a table form, in a T form, though it is not an account. It can be presented also in this format. So we see on one side all the assets being listed, and we see on the other side the capital and the liabilities being listed, so that at the end of the day the total of the asset will equate the total of the capital and the liabilities. In this session, we discussed the statement of financial position, distinguished the statement of financial position from the trading profit or loss account, and explained the accounting equation for the statement of financial position preparation, and drew up the statement of financial position using the horizontal style and the vertical styles of presentation. Thank you.